Hello traders! This video will be solely dedicated for true beginners. The topic for today is opening and closing position in trading. So if you are familiar with this, then feel free to skip it. But if you're interested in what actually is happening when you are opening and closing a position, then just stick around and watch the video. Well, in order to make money in trading, you should sell at a higher price than you have bought, right? So there are two transactions involved: buying and selling. One of them will be your initial decision, and second trade will fix your position. If you were correct, you'll record a positive change in your account, but if you were wrong, you'll suffer a loss. Quick reminder, if you have come across terms like long or long position, that means a buy trade, sell or short means sell position respectively. So now let's switch to the platform. Okay guys, we are in the client's cabinet. I have opened the Euro-USD currency pair, and we have the chart of this currency. It's, for example, M30 time frame. It can stay like that, and on the right side we have the section opening of a trade. And we have the two types of the possibilities to open a trade. Either immediate opening of a transaction at the best current price, which is done by this section when you click button now, or the pending order, which is done when you click for this button at the price. Let's start from the immediate opening of a transaction. We have the two directions, of course, selling or buying. Here you set the volume, which is the amount of volume of your trade, which is how big you want your position to be. And down below you have the closing conditions, which is the take profit or stop loss, which are the automatic orders for closing your trade. Either you will be in profit or in loss respectively. And you can set it by the amount of money specified that you want to make or you are able to lose, the amount of movement, which is how much pips you think that the price should go in your favor or in not your favor, or previously specified price, right? So now let's go through the pending orders. Okay, and again, there are two types of the pending orders. There are stop orders and limit orders. Let's start with the stop order, and let's do it based on an example. So right here, we think that the price is, for example, 1.2157, right? And we think that it will go up. But first, from our analysis, for example, we think that first it will have to take this level, which is 1.2177, and after that, if it goes through this, we want to hop on a trade. And there goes the stop order, specified by stop order, which is set above the price. So now what we're gonna do is, for example, check where we want to enter, measure it with our mouse, of course, and we want to go in at 1.2184. 1.21, we set it here in this section opening price. Yeah, volume, closing position, closing conditions, we can set it, of course, and hit buy. We have the confirmation. Let's check it here that our trade has been placed. Let's mark it also with the trend line 84. Let's make it a bit thicker. So now, when the price will reach this level and go through, the trade will be executed. But when the price will go from example, from this moment straight downward, the trade will not be executed, and we can simply just remove it. So now let's go in the opposite direction, the sell stop. And again, if we want to sell, it needs to be set at the lower price of the current one. So we have again 1.2158. We think that it will go downwards. Yeah, we make another analysis. But first we want to see the breaking through the level of 1.2141. And then at, for example, 1.2135, we want to go in. So again, 35, we set the price which we want to at which we want to go in. Again, volume, closing positions, and then we are clicking sell. We have the confirmation, And again we see that our another trade has been placed. 21.35. Let's mark it again with the trending line right here. Let's make it thicker and let's make it red that this is a sell order. Okay. And maybe let's add some text that this is buy stop. Right, this is a buy stop. And this is a sell stop. Right here. Okay. And again, if the price will go from this moment upwards, then your trade will not be executed. So these are the examples of the stop orders. Now let's move for the limit orders. So again, the difference between the stop order and limit order is that they are placed in opposite direction because they are used for the different scenarios, different analysis. So again, let's check an example. From this moment, when we have the price 1.21, almost 60, we think that the price will go further downward, but first we think that it will make a correction up to 1.2181, and then it will go straight ballistic downward. So what we do, again, marking sell, setting the price 1.2181 and click sell. And again we have the confirmation right here again in the list of our trades. And again let's mark it with the trend line 2181. Again, let's make it thicker, make it red because it is a sell. And yeah, of course, again, when the price will not reach this level and go straight downward, the trade will not be executed. So it is respectively to the scenario when we think that the price will go up, but first it will make a, something like a retest or a correction downward, and then will go straight up. So let's click buy. Let's check that the price, that for example we want that the price will reach first the level, which is the 1.21. For example, this is just I'm not doing here any analysis. It is for this describing the example only. So 1.2142. So we think that it will reach this level and then go straight upward. Again, setting the price, clicking buy. We have the confirmation. It is down below in your portfolio. We have 1.2142 and it is buy at. Let's of course mark it with the trend line. It is green, so it is correct. Make it thicker. Let's add the description. It is a sell limit. It is a buy limit. So guys, let's talk about the margin. It is displayed in the left below corner. As you can see, our limit order was triggered. But yeah, again, let's check an example. I placed another order of buy trade, 0.10 lots. And as you can see, our assets used have grown for 20 euros. And right here you see that this trade initially it is on loss, due to the difference in prices that other participants are willing to pay to buy or sell our order, right? To fix it, as we were talking about it I was talking about it in the beginning of the video. So let's add another trade. As you can see, the assets used are growing, and another one, and another one. Right now we have 4 trades with 0.10 and 1 trade 0.01. And as you can see, it is it added to the assets used. It depends on the leverage that you use on the account. So the higher the leverage, the lower the assets you need to open the transactions, because it is like the minimum amount you need to have in your account to open a particular trade. And of course, what I need to mention here is that you should not rush to open as many trades as possible, or one particular trade with the max volume possible on your account, because if your analysis is wrong, then yeah, your account will be very quickly nullified or burnt, whatever you want to call it. So yeah, that's the biggest mistake for the beginners, which you should avoid, of course. So the last thing I want to talk about in this video is the stop loss and the trailing stop. The stop loss, if you don't know, it's the automatic order that close your position, close your transaction automatically with the previously specified price on the previously specified level. For example, we mark our trades, yeah, they're all around this level. Again, let's make it thicker, and this was our entry. If the price will go again down below at up to this level, our trades will be automatically closed. And the difference between the trailing stop and the typical stop loss is that when the opposite scenario occurs, which is the price go in our direction that we want, which is in this example upward, which is happening right now, by the way, let's make it thicker. The typical stop loss, if you also can change its level, yeah, to break even, or you know, whatever you want, but you have to do it manually. The trailing stop follows the price. So for example, if the price will go up, for example up to this level, the stop loss will go up along with it, along with the price. You also specify the amount of pips, that is the distance between the current price and the trailing stop. And it goes like this. If the price will again go a bit downward, the stop loss stays at the same level. When the price goes again upward, the stop loss follows, the trailing stop follows. But again, if the price is moving downward, the trailing stop stays at the highest level. And yeah, again, and when it goes upward, stop loss follows, but it is let's delete it. It is triggered when the situation occurs that the price went up and then moves in the opposite direction by more than those 30 pips that we set the trailing stop. Then it is triggered. Then right here the stop loss occurs. And if you wonder how to set the trailing stop, you go again to the lower bar, you click edit on your open position, and right here you have trailing stop option, and you set this amount is in pips. Of course you set it with the amount of pips that it should follow the price. So it will, when the price will go up, it will of course again, let's set it. It is changed right now, as you can see. Again, I edited it, and again, as you can see, when the price goes up, it follows. When the price goes down, it stays at the highest level that that followed the price. Again, go up along with it. When it goes down, stays at the highest level, and again until the price reverses more than the distance we set in the trailing stop. Well guys, thanks for watching, and till next time. Bye.